What is up, Crusaders of Crypt Nation? It is our 8th episode. Today is July 31st, and I think this is going to be the best one yet.
Absolutely, because it's a fantastic day of news. All really, really good news.
We have significant global news. We have, first and foremost, something that's impacting the entire world. We have the Fed, who cut interest rates today by 25 basis points. So we're going to get into what the implications are of that.
Yep.
We have the Litecoin halving coming up, really gaining steam. It's 4 days and 11 hours away. So we're going to tell you what that means.
Ooh.
It's going to be gnarly. We have LedgerX, who launched physically settled Bitcoin Futures today for Americans, for retails, for institutions. Massive implications.
Yes.
God, the list goes on. We have the SEC running crypto nodes. They put out a little Fed BizOps request for proposals.
Yeah, they're getting on board.
We have a Middle East Bitcoin on-ramp, off-ramp coming up that just got launched today. And then lastly, finally, the UK provides a little bit of regulatory guidance to the UKers.
That's right. And could the US follow their lead? We'll see.
We'll see. Let's dig in. So first, I really want to focus on what dropping interest rates mean. So dropping interest rates, interest rates are the price of money, right? So the lower the interest rates, the easier it is to borrow that money, right? Banks make money off of lending and collecting interest payments. So the lower that the interest rates are, the more willing they're going to loan out because they need to loan out more to make that same return. So basically, interest rates and asset prices typically have like an inverse relationship. So if the interest rates drop, money's cheaper, money's denominating the value of an asset, so the asset price rises. But in this case today, we actually saw kind of I don't want to call it black swan, but I'll call it something that everybody didn't really foresee, where when the Fed announced that they were officially going to cut interest rates by 25 basis points or 0.25%, assets actually started selling off, and the index of the dollar strength went up. So people are like, what the heck? What's going on, right? But basically, the idea is that everybody knew that interest rates were going to get cut. It was no secret. Everybody's been talking about it. Powell's been talking about it. The Fed's been talking about it. Trump's been tweeting about it and stuff. And so when assets prices started selling off, the market kind of realized that, like, hey, everybody's been pricing this in, and the way that they're cutting these rates isn't necessarily a new regime change, right? So we had quantitative easing to take us out of the depression or the recession or whatever, and then we had quantitative tightening, which was rolling that back in, and now Trump and the powers that be are trying to say, let's go back to a little bit of easier money, right? We want to be able to print a little bit more money. We want asset prices to continue to expand to the upside. But we didn't see that today. So I have some good quotes here, and the reason why is because Jerome Powell, who's the chairman of the Federal Reserve, says the committee sees this as a way to ensure the market expansion. As soon as he said those words, the market sells off. Because the market kind of saw this as a one-time thing, not necessarily something that was going to be this long-winded thing. Powell continues to say, we're thinking of it as a mid-cycle adjustment to policy. That was it, right? It wasn't like the market was thinking it's going to be this full-blown new wave of quantitative easing, and it just wasn't that. And then Trump had a great tweet just 50 minutes ago. He says, what the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate-cutting cycle, which would keep pace with China, the European Union, and other countries around the world. As usual, Powell let us down, but at least he is ending quantitative tightening, which should not have started in the first place. No inflation. We are winning anyway, but I'm certainly not getting much help from the Federal Reserve. So we saw the Dow Jones, the Russell 2000, SPX, NASDAQ, all the indexes for asset prices here in America started to drop. And we saw Bitcoin actually not really phased one way or another. I think we kind of peaked up a little bit above 10K, not a much volume, but this is we were expecting a full-blown trend to unfold essentially with quantitative easing, but it's not really happening. So we're looking forward to what you guys think about this, but it was a pretty interesting and significant day.
Yeah, it sounds like we were all in this huge, long waiting pattern to see what the decision was going to be, and instead of being something big, it was just a very, very tight little tweak.
Yeah, just a little tweak. And they're saying, we're staying with this same regime. We want to keep things tight, but I don't know. It should be interesting, but it's definitely a narrative to keep your eyes on.
Yeah. So instead of in contrast to printing a little bit more money, now we have Litecoin that's going to be delivering a lot less.
Yeah, exactly. Talk about it, baby. What's going on?
The Litecoin halving is 4 days away, and what halving means references mining rewards. Litecoin is a proof of work coin that requires all these machines to do the work, and whoever makes that block, they get a certain amount of Litecoin as a reward. And that reward is going to be cut in half, which means reducing the supply. This halving happens every 4 years, same as Bitcoin. However, there's a slight offset.
Mm-hmm.
So what this is, the expectation of this is now Litecoin is going to become a more scarce asset, and just by laws of supply and demand should go up.
Exactly. So what we have right now is 74% of all Litecoin are already in circulation. And the inflation rate today is 8.71%. But in 4 days and 11 hours, that inflation rate will experience what we call a step function, which is a momentary, in a split second, adjustment from that 8.71% to a 4.26% inflation rate.
That's right, and the block reward is decreasing from 25 Litecoin to 12.5.
Right, and so this means it's kind of more expensive to mine. It's less profitable unless the denomination of the value of Litecoin continues to rise against the dollar, and then people can cover their cost base, their mining cost basis. Still okay, right? So we have seen. I use coinmetrics.io. They're a great site to find out the mining difficulty of these different networks and stuff. And we could actually see that the mining difficulty, which is also kind of a proxy for looking at the hash rate, continues to rise. So what does that tell me? That tells me that miners are still bullish on Litecoin because they're dedicating hardware and they're dedicating energy and electricity, right, to mine Litecoin. They still foresee future price appreciation against the US dollar for Litecoin. So this is going to be big.
Yeah. But not as big as LedgerX coming out with a physically settled Bitcoin futures that is legal, offered to Americans.
This is really, really big. So backed, ICE's backed has been talking about this for whatever years.
Yeah.
We have ErisX, who is Fidelity and TD Ameritrade's thing, which is all trying to do physically settled Bitcoin forwards and swaps. And so anyhow, LedgerX kind of just comes out of nowhere with this announcement that, hey, retail investors, institutional investors, you can get exposure to the price action of Bitcoin through these fully regulated products, and all you have to do is a little bit of KYC. So the difference here with the CME Bitcoin futures is that the CME Bitcoin futures are cash settled, and we've talked a little bit about this in our previous shows and what that all means. But what's really important about this is that anybody could buy, a fraction of a Bitcoin future. So at the CME, you have to spend 5 Bitcoin in order to make a transaction to buy or sell. It's 5 lots, right? 5 contracts. That's a lot of money, right?
People don't have that, especially since let's get real simple in case this is someone's very first time learning about or hearing about Bitcoin futures. A futures market is literally a bet. You're making a bet on what the price is going to be in the future.
Mm-hmm.
A 5 Bitcoin lot that you'd have to use on CME is like $50,000.
Yeah.
Who's going to make a $50,000 bet on the price of Bitcoin?
Institutions only, miners,
right?
Who need that kind.
Very, very small amount of people. But with this,
guys like us, we can't do that.
No. But with this, anyone can participate. You can place a small bet. It's not going to cost you a mortgage if you win or lose. But the most important thing is being physically settled. This creates a lot more transaction volume and demand for the physical asset.
And you could actually deposit Bitcoin in order to buy Bitcoin forwards with your Bitcoin. So this is a great way in order to not necessarily have to have a capital gains tax on a actual sale of your spot Bitcoin. Say the price is rising, you're like, oh my gosh, this is going too quick. I'm gonna keep my spot, I'm gonna hold it, and I'm gonna take out a leveraged short position using my Bitcoin as collateral. So there's just it opens up a lot of new ways to hedge your positions. But let's move on.
Yeah, we'll explain what all that means in a later segment.
Yes, indeed. The SEC wants to run crypto nodes. This is Pizza Mine's favorite story almost of the year.
It is.
Because he was cruising Fed BizOps and saw I don't know. What'd you see?
So I was actually cruising crypto Twitter. I mean, which is really on top of things, and I saw the rumor that the SEC wanted to run crypto nodes, but no one could find a legitimate source. So I started deep diving, and I literally found it. It's on FedBizOps or FBO.gov.
If you've ever seen the movie War Dogs, this is with Jonah Hill and Miles Teller, I think. Have you seen it? It's awesome. It's like one of my favorite movies. But basically, they go and they search FedBizOps for weapons contracts. Like the government is saying, they put out a request for proposal on this site that any contractor could fulfill this thing. So watch War Dogs.
Yeah. So now they have that same bulletin out. Any vendor who can set up nodes and run them for them and provide them a bunch of different data. So they want data that talks about money being moved around, transaction hashes, unspent balances, transaction fees, block numbers, hash rates, like all kinds of stuff. They're trying to get this information so they can maybe potentially match it up with other things that they're looking at. So they said
probably like anti-money laundering and that kind of stuff.
So at minimum they want Bitcoin and Ethereum, but they've also requested Bitcoin Cash, Zcash, Stellar, EOS, Neo, and Ripple. They also want as much derivative data on these tokens as well. So we'll see. It's very, very interesting. But yeah, the SEC is going to be paying for crypto nodes now.
Not bad.
Yeah.
I wonder if they're going to be voting in the next user-activated soft fork of the next network.
Gotta wonder.
The other interesting thing that was coming out is a new exchange opening up in the Middle East called Rain. And why do we think this is so important?
This is important because the Middle East has a ton of money, an absolute ton of money.
Oil money, gold money.
Yeah, tons of oil and gold money, and pretty much every other exchange that wants to do business with a G20 country has had to block a lot of the Middle East countries. Now they have their own fiat on-ramp that is allowing them to bring on United Emirates dirham, Saudi riyal, Omani riyal, and lots of other Middle East fiat currencies to buy Bitcoin, Ethereum, and Litecoin. So that's potentially trillions of dollars.
Yeah. No, I'm excited for this
capital coming into the space.
And lastly, we have the UK regulatory bodies finally issuing some general guidance around cryptocurrencies. The long story short on this is that Bitcoin and Ethereum have been declared unregulated assets and are not subject to the FCA's rules or watch.
Yes, this is huge. So any utility token, they're just going to leave alone, do what you got to do. Anything that's kind of on the fence between utility and security, they'll judge on a case-by-case basis.
Pretty big stuff.
In addition, there's no new license or any other work for exchanges to do. They can now move forward without being fear of being shut down or thrown in jail, which is enormous.
All except for derivatives. Derivatives, like what BitMEX offers or Deribit or Bybit, those are still going to be very closely regulated and very closly watched. In America, it's the CFTC that does that regulation. Yeah. But derivatives are a completely different animal than the spot markets.
That's right, and they are still considering banning all crypto derivatives altogether. But that's coming. A decision on that's coming later.
Well, that is July 31st, episode 8 of Today in Crypto.
What a day it's been.
This is going to be a historic day. This is probably going to be the best Today in Crypto in history.
Potentially.
Thanks for watching.
We'll see you tomorrow.
See you tomorrow.